I don't know. I thought I hit the button. I'm sorry, guys. Anyway, we shall start over again. I thought I hit that microphone button there. It's my routine to get started. But in any way, I was saying that pretty much, our pre-market bias from yesterday of consolidation followed through. If you followed that from a swing trading perspective of the charts that we're looking at here, you stayed out of trouble. If you're an intraday trader, you have your plan to trade accordingly as things change on a day-to-day basis from a smaller time frame. That's okay. So you have to keep in perspective of what you're dealing with in multiple time frames. So as prices are chopping around here as they are, there can be a tendency to get whipsawed even intraday. So you just have to, as always, have a plan. From this time frame, things got a little extended here. They had this miracle recovery from this breakout failure, this nasty break higher. Because I'm calling it nasty because it was such a wide range bar. It gapped down and a wide range bar up. And if you remember this intraday, it was like a power uptrend, which said, hey, maybe a 1, 2, 3 consolidation higher, which was an inside bar, resting day, and then higher. That didn't happen. It gapped down, and it was just a relentless selling. And this is why I call this market a Mr. Schizophrenic market. It is just, lunacy at times as to the price action. And then it just recovers as if this never happened again. And that's, schizophrenic, two personalities existing at the same time, extreme greed and extreme fear from one day to the next. And then it's like, oh, everything's okay. So, and now back up it goes as if I, in my own view of the price analysis here, it's like, okay, so many are taking profits, you're getting short, and then realize that was a mistake. They reverse, and that drives the markets back up again, all while, sentiment stays at a level that says, be careful. And it backed off a little bit. It never came down to a level where even in other bull markets, the typical action here is during these smaller corrections, right away, option traders go and buy protective puts, or they bet that the market's going to go down. In this market, they become accustomed to not having to do that everything will be okay. While we'll hedge a little bit, it just doesn't make any sense anymore to hedge or buy puts to the downside because it doesn't work. And no one can argue with that as far as it doesn't work. But in the past, it's exactly what they did, because they were concerned about the risk. And now that's kind of gone away. Even on this nasty reversal day here, look at where sentiment was. This is a moving average of this day-to-day put-call ratio. And then the other day, it poked up to here where it closed up at an extreme. And this is what started this little consolidation. And still, as prices sold off yesterday, complacency. So we cannot argue with the strength of what is in the moment, but we have to recognize that a market like this, something could trigger it where it's like, something's wrong. Oh, really? Something's wrong here? Yeah, it's been going up and up and up and nobody cares. And it can keep going up, but the proper price action is that there's a concern, right? Climbing that wall of worry. And there's little to no wall of worry here. So what could trigger it? I don't, just my thought of, because I don't see much triggering this thing, but we do have FOMC minutes today at 2:00, and who knows what they're going to say. I don't think anybody's expecting too much difference, but it's something to be aware of as an intraday trader. That's, there's some news coming out at 2:00 that could make the markets go down or up. So keep it in mind. So consolidation here, don't get chopped up. It is what it is here, and consolidations with an uptrends are bullish. So we'll see if it pulls back. And as I say almost every day, our first reference point of support is the prior day's low and resistance is the prior day's high. And right now we're kind of just trading in between there. So just keep that in mind, see where it goes above or below. And overall, it's just in the trading range. And as I mentioned on Monday in our letter, keep an eye on last Thursday's low as a smaller but more significant reference point to see if that holds or not. Because if it breaks below that, we've got there's a rather large unfilled gap below. So just be aware, you have your plan and then you see what happens on any given day. And you can see this little choppy consolidation that's going on after making a new high. That's bullish. Yesterday was a go nowhere day. It tried to go up. It tried to go down. It went nowhere. Essentially in about the middle of the range on the Qs there. And you see in the weekly chart, it's up at resistance, but we've had a multiple week consolidation. Prices broke out last week. That says they're going higher. And the view here is that they're just digesting that breakout and these gains here. And until proven otherwise, the assumption is they'll keep going up. So know your reference points, set alerts, and play it accordingly. Russell, right? So this has been the laggard, but more selling yesterday. And then why we look at all of these different markets to see, are they all moving together? Is there a weakness, extreme weakness in one versus another? That might give us a more of a guidance rather than saying, hey, I'm looking for choppy consolidation here. For the most part, probably the best to keep my powder dry, look for some intraday trades and wait for the daily charts to set up for swings to go higher. Now, with that bias in place, if the markets for some other reason should have some nasty sell-off, the bias changes based on new information. Transport's gap down from a nice green bar, but overall, just chopping sideways. So when you see these kind of consolidations and you see one day being bullish and another day being bearish, as intraday traders, it's easy to get caught up in that go nowhere nothingness, but think it's something more significant. So you got to step back, excuse me, and look at this bigger picture and say, well, as long as it holds this area, even though this is that schizophrenic type of trading, nothing really much has happened. And, sometimes the thing to do, there's a suggestion, is go to your charts and just say, you know what, let me just get rid of all of that and look at a line chart. Is anything of significant happening here? I mean, this thing went up, up, up. It's pulled back a little bit deep here. But overall, you have to recognize that as strength. So candles give us pictures that speak to us. But sometimes when things get a little confusing, a couple of choices. Go to look at a line chart, or go to a higher time frame. What does it say? So as I look at a higher time frame like this, there's like others that say, hey, this is bullish and it should go up. And I look at a daily time frame and look at like this and I say, well, it's just choppy. There's nothing much going on here, and I need some type of a pattern on the daily time frame to come into alignment with the bias from the weekly time frame. And when that happens, this should resume to go higher. And diamonds, Boeing, of course, but overall, pretty bullish. We'll see if where this closes at the end of the week. Right now, we got a little bit of a bearish consolidation from the prior week, but it's inside that week, but it's down below the low of that week. So as always, depending on the time frame, first reference point of support is a prior bar's low. In this case, it's the weekly chart. On the daily time frame, we do the same. And we look at where CPL, where that pivot low is. And in this case, that's major support because it made a higher high. Futures, same story, chop, Qs, same story, chop up at resistance. So far, we'll see. We got a red bar yesterday inside the prior bar's range. So just going nowhere. Whatever opinions you hear, in the media or other websites, chat rooms, whatever. Look at the chart. As I'm explaining to you, is anything happening here other than chop? No. So we cannot get a bias to believe that anything of significance is going to happen in either direction yet. But, we're up at resistance. Major move is to the upside here. And we're just waiting for the picture to set up. Dow, as explained, it's coming in a little bit harder. Bonds, right? They're holding here where they're supposed to hold. They ran up strong. They had a little breakout failure there, created uncertainty. Profit taking comes in. It reaches a new reference point of support. You can see this little consolidation right there. Bottoming tail bar. It's trying to move higher. And so you want to keep an eye on that because that will raise the head of the yield curve inversion fears. So keep an eye on bonds. I told you yesterday, if you don't have futures, just use TLT to see if it's going up. Gold consolidating here, but holding here. We spoke about the breakdown failure. These little failure bars in combination with the bigger picture are powerful signals. So you should learn how to use them. Oil is super strong. Came up into this area I pointed to yesterday, and it is also consolidating here. So it looks like it could go higher. There's really not much to the left there to stop it, but do the same thing. Bar by bar analysis. Prior bar of your first reference point of support and resistance, then go to the swing low and measure accordingly. And that's a few sectors here. What time is it? 18 minutes. All right. Consumer staples kind of grinding higher. Semiconductors correcting, run up a bit. They're correcting down a little bit here. What else is moving here? Technology's been leading, but maybe they underperform. We've been kind of looking for and expecting energy to play catch up, and they broke out of the range and they come in a little bit. So far they're holding here today. Just a lot of chop, but they should start to move higher. So I think that's it from me, Dan. It's pretty much the same story everywhere of choppy consolidations going on here, little pullbacks, little attempts to pull back. And so I guess my message, Daryl, is kind of, keep the powder dry and wait for the good setups to happen as we always should. And, until this is resolved, the big opportunities are not here for the most part.
All righty. Good morning, folks. Did everyone see the comedian show between Munition yesterday and Maxine Waters? That was funny. All right, Golf Hotel here is a gapper. This look lower, but our something's going to be if it trades over this red bar. It's a bullish gap resistance. This will be a great 30-minute high candidate for a put spread. Mike was asking about FCX. Yes, we're still in it. Stop is under 13 bucks. Amazon, we have a put spread. PCH, long stock. That was our breakout on the daily and weekly. So we start with a big stop down here. I was trying to leg into a covered call, but there was no juice. Zallo, we have both a covered call and a short put. KWeb, short put. Tilray, covered put, which is the opposite of a covered call. Cara, our new pot stock, with a nice little gap up here too. We'll be moving stock this morning. OIH, we're long the ETF. CRC, same. We added a couple of these oils last Friday. PLCE, we have a put spread that expires this Friday. It looks fine, it looks good. Abgo has not triggered. Michael Jackson, the ETF, we have a bear call credit spread. Disney, a bull put credit spread. For Friday, let me look at a few of these that are leftovers. AIZ is a short watch under yesterday's low. PGR is a short under yesterday's low. ISRG is a put spread candidate. TPX, it had a big tail, but now it's, oh, that's a huge gap. Wow, that was on our long list yesterday from scanning. That would have been a nice gift this morning, that gap up. Deer, we have a call spread and we covered half yesterday. Max, 50% of max gain in 1 day. MTG, this one stopped out yesterday. So let me delete him. GWRE, that's strong. That's on the long list. NEO, long list. PRSP, long list. I like the weekly 1, 2, 3. Tango Whiskey, a recent IPO. We're just going to start watching. Fizzler. I was watching this on a pullback here for a core trade based on the monthly. And it's gapping up, so that's messing us up. Fix. Hey, this might be what we call a gap and snap. I would prefer the daily to be multiple red bars down, but this is getting pretty climactic on the 15-minute chart. And now it's gapping. Yes, well, no, this is the gap. No, never mind, that still looks lower. BRSS, this thing just blasted off pre-market, 43.50. It's gapping over what I could see on my monthly chart. So Delta had earnings, so we want to keep an eye on some other, the sector. 58.31, I liked this pattern the best. I looked at a couple of them already. I'll put him down here. I put Delta in the upper right, but that one's 59 bucks. So there's no trade on that, but I'd much rather prefer that ALK. $1.23, that's a big old gap. Look at this monthly chart. Wow, 1,000 bucks. And now it's just coming back to life this year. Pergo, it was gapping up 51 bucks, nothing to do there. SFET, this looks like a penny stock toy, but bullish gap up. Now see, notice the difference of these bars. This is what I call a penny stock toy. There's no tradable pattern, and then when you get these spikes, this is just classic of a pump and dump operation. These folks accumulate shares and they have a pump and dump scheme. They send out a press release, they get a one-day wonder, and they sell into it, and then it's back to being a dead animal. So I have no interest in that. But look, see the difference? These bars are very tradable. So if we get a tradable pattern on this, then I'll consider it. I saw Apple was down like $1.70 earlier with the market gapping up. We took our stop 30-minute low yesterday. And I got an email from a new subscriber actually asking, he said, well, why would you stop out when Friday's expiration and then you're missing out on more time decay? And I just had to explain that everything we do is chart based, both for the entry and the management. And we're showing relative strength. We gave them a 30-minute low. We gave them time to perform. The market was in a weird mood. Internals overbought, and we locked in a gain. So now we aren't sitting through an 89-cent gap down. When, no pattern here, but it was in the news that they are not going to be buying a foreign competitor. Well, that's right, trader. The gamma risk comes from the pattern not acting right. So that's why we don't care about gamma, the Greek, as a technician. I looked this one up, ALC. It was actually a spin-off of another company, so it's not really an IPO. We'll see what it does. Oh, Munster is not a gapping stop, but I just came across it. This is a W pattern with a new low, wide range bar yesterday. So this is a put spread candidate. Yeah, from MBS. Levi, remember I said yesterday? Oh, it wasn't Levi, it was Lyft. Never mind. Lyft, I was saying, let's see what it does at this prior low. But the reason I like this one, folks, greater than 100% retracement and 180 reversal. So that looks great. Since I'm not going to trade Delta, I'm going to put Levi there. So that is a beautiful reversal. That belongs in the textbook. PGR, so I posted it already. It's a go under yesterday's low. Delta, so these are leftover now. Some of these from traders. Lists, ANET strong. Look, remember, trader, I said we need a something something on your PRO. There it is. Yesterday was your something something. It's a no-brainer put trade, and we'll watch it intraday to see if we can do a stock play. This is a weak animal, CRCM. That's on my short watch list. Maybe 10-minute low. If this just goes sideways, the ideal would be 30 minutes. If it just chugs along here at the low, that will be a no-brainer short. Zixi, I've been watching for a few days. NBEV was that thing that took off. Now I got no interest in that. Mighty Mo, nothing. This one is still a valid trade. It was in the weekend letter, but it has to get over this bar. And there's the old Tesla. Nothing to do. There's our Bitcoin. We're still in. Hey, Greg, are you listening?
Yeah, what up?
Look, this is in our ETF. I gave them second target, 675. Boom. So it got hit yesterday. Well, it got hit 2 days ago. So we have one. Hey, and do you remember, what's your name? Alex. Remember you were asking me, why are you not selling at all on this gap up day? And I said, because it was a core trade, the larger time frames had room to